Good afternoon. Bob Dalton coming to you from Allendale's trading floor here in McHenry, Illinois. It is Monday, December 5th, 2011. Very interesting day, very exciting day as far as the markets are concerned, in that we have pretty much reversed every market that we watch here at Allendale, as well as the equities there, with the Dow only up about 11 points right now after being up 150-something earlier on in the day. We came in overnight. The grains were a little bit higher, with the exception of wheat. Wheat was struggling to build any type of premium. Corn was higher, beans were higher. We opened up even higher than where we finished up overnight. Crude oil at that point at 7:30 this morning, or excuse me, 9:30 this morning, was up over $1. You had the dollar pulling back, down about 40 points early on this morning. And as I sit here talking to you now, just about all of that has changed to the opposite direction. You had corn finished today down 4 1/4 at 5.91 in the March. January soybeans down 9 1/2, 11.26 1/4, and we had the wheat down 14 at 6.11 1/2. The dollar right now is up, although slightly higher. It is up a little bit at 78.74, and you have crude oil down 24 cents right now at 100.75 a barrel. What caused all of this? Well, you had S&P come out and say today that there is a distinct possibility that they're going to be downgrading 5 European nations, their credit ratings, from AAA status. They're going to be bringing them on down. That hurt the euro and started to rally the dollar. Right. When the dollar rallies, you know the commodities are generally pulled back off of that news. You also have the Dow, like I said, off of its highs by well over 100 points right now on the day. So how do you trade this? Well, technically there's some good support underneath corn right near the closing point here at 691. 686, 688, and then 686. There's some support, horizontal support on that chart to take a look at. Soybeans about 1110, 1111. That area, there's some good support. In the wheat, you're looking down around 605 to $6 for support. So we may have an opportunity here to go ahead and try to re-own some of these grains that we've already priced out. On the other hand, if we take out that support and fail big time, you're going to want to step up to the plate and start making some cash sales. So if you have any questions on what you should be doing and when you should be doing it, give us a call. 800-262-7538 is the number here to the Allendale's trading floor office. Brokers will be more than happy to take care of any questions or concerns you may have. But be very cautious in this area, because we're right at the tipping point as to what can happen next. If we take out support, which is only a couple cents away, we're probably going to go down for a little while. If we hold this support and bounce, we may see some buying come in as a re-ownership strategy. So give us a call with your questions. Over to the livestock. For whatever reason you want to call it, some are saying that longs were getting out of their positions today in the fat cattle. December contract today was first notice day. December was limit down today, as was the February contract in the fat. It's limit down. Feb closed at 120.25. Even off of the snowstorm we had out west, we probably traded that in last week before it even hit, and then when the 5-6 inches fell in the areas that we were anticipating to affect feeding and feedlot operations. Now that that's happened, it's time to take the premium back out of the market. Not that big of a deal. Happened on Friday night into Saturday morning. Plenty of time to clean up, get the roads cleared so that we can transport meat. So that's one reason why the cattle may have gone limit down. The second one, of course, being that December is in first notice now, and those who don't want to be long during delivery we're getting out today as well. Feeders followed suit, down 277 1/2. Odd to see that happen with corn pulling back, but there are some out there saying these feeders are way too expensive. We don't know how we're going to make cattle feeding work this year with corn still near $6, the feeders at $1.50. How are we going to make this work? Well, today we took 277 1/2 off of the feeders in January. 144.30 is where they closed up. Then over to the hogs, $1.10 coming off of Feb at 88.12 1/2. So we just saw some general liquidation all across the agricultural commodities today. And then with the dollar turning around late in the session, you're going to see pressure come into other commodities as well, such as the metals, the energies, and what have you. So going forward, we are looking at hedges for 2012. We are getting ready for our 2012 Outlook meeting, the Outlook conference at the end of January, the 20th and 21st. If you want to join us, give us a call. We'll be more than happy to get seats reserved for you and give you the details you're going to need to know to get a hotel and flight and whatnot to come see us at the end of January. Also, for those of you in southern and central Minnesota as well as northern Iowa, we're going to be in Albert Lea, Minnesota on Wednesday morning at 9 a.m. If you want details on where we're going to be, when we're going to be there, and what we're going to be doing, again, give us a call, talk to your broker, or talk to somebody here at the office. We'll be more than happy to email you off details on the meeting in Albert Lea. And that's just going to about do it for me here this week. My name again is Bob Dalton. Thanks for tuning in, and good luck trading.